What's going on, everybody? Good morning. It's Thursday, 6:30 a.m., September 10th. My name is Amal, and again, for those of you who are not familiar with our community, we have a pretty active Discord channel with hundreds of members from all over the world, really, and we're pretty active in our Discord community, whether we're trading DeFi coins, whether we're trading traditional altcoins, Bitcoin right here. We have a ton of channels, as you can see, Bitcoin analysis, Bitcoin leverage short, long, altcoin analysis, altcoin spot buy, DeFi trading, DeFi analysis, all kinds of really interesting stuff. But before all that, I think the more important thing before you get into even trading is, first of all, you need to understand and respect trading for the job and the art and the skill that it requires of most people. And most people are not willing to admit that sometimes trading is supposed to be boring. It's supposed to not be a game that you treat like gambling. Rather, it should be something where you need to understand that you're playing with your hard-earned money, okay? And if you understand that you're playing with your hard-earned money, there are really two rules to the game that apply to the game of trading, that is. And it is this, okay? Rule number one, protect your capital at all costs. When you see the market becoming a little bit too euphoric, too bullish, if there are certain key resistance levels that you're hitting and you're not taking profit, take profit, okay? You will thank yourself later. You will thank the discipline of trading later, but always take profit. So that's rule number one, right? Protect your capital. Rule number two is to grow your capital. Now, you can't get to rule number two unless you get through rule number one, which is actually protecting your capital that you have, right? So I actually wrote up an article, actually a writer did. It's called How to Trade for a Living. And this was based off my 10 commandments of what you require as a trader, as key disciplines, okay? And you could see right here, rule number one, risk management, position sizing, use stop loss, all this kind of stuff. And you can find this on our YouTube channel, just type in 10 commandments, how to trade for a living. And our YouTube channel is Alpha Trades, okay? You can also go to our website and you could check out our other videos. We have blog posts right here, tons of blog posts of all kinds of written samples, written pieces that we have on the market, tons of great stuff. Okay, so this is a really good article for you to understand, in 10 steps, how to get your mind right of exactly, how you need to approach the market to not get blown away in trades, lose, 20, 30% or your entire account, or lose your emotions, more importantly. So make sure you read this article, okay? I'm gonna post a link in the comments below, all right? And then, on top of that, I just want to say that we've kind of been in this range, right? So let's kind of talk about the Bitcoin analysis, okay? So first things first, I want to start off with a higher time frame, and then we're going to dig down to the smaller one, okay? So when we were in this trading range right here, okay, right here, this is a positive sign that we were kind of staying up here and we were respecting these higher lows. We were not taking out these key lows or even any of these lows. And you could see price kind of broke down aggressively. And it seems like we're kind of maybe forming a base, okay? And we're forming a base right here, right on top of previous resistance, okay? Now there's a positive and a negative to this. The positive is that, well, we're coming back to this key area right here, which was the previous SR level. So let's turn that on, right? You could see across the board, all we're really doing is coming back and flipping this area of resistance into support. So nothing wrong with that. But more importantly, we actually broke down impulsively from this range right here, okay? And this is never really a good sign in markets where price kind of breaks down aggressively after a month-long created range. More often than not, when that happens is there's possibly this is a pause before a continuation to the downside. Now, I'm not saying that we have to break down further, because I think for the most part, what Bitcoin is really dependent on is how risk-on is the stock market, how is the DXY looking, okay? So I think for now, the DXY being the dollar, for those of you who are not familiar with this theory of mine, or it's not really a theory, it's actually, pretty factual, which is that the dollar being, the strongest currency in the world, once the dollar starts gaining strength to the upside, you typically see a pullback in the markets, okay? Like, over the last couple of days, you've seen this kind of drawdown in US equities, right? You've seen that same kind of drawdown in Bitcoin right here, as you can very well see. And then you've also seen the same in things like gold, okay? Gold put in its key high, right around beginning of August. And since then, it's just continuously creating lower highs, as you can see. Okay, so for the most part, all assets can be attributed to the strength or weakness of the DXY, okay? And so at present moment where we are right now is we're kind of creating this base. And the reason we're creating this base is I think Bitcoin is trying to figure out what the stock market is trying to do. And the stock market is trying to figure out what DXY is going to do. We're in this descending broadening wedge pattern right here, okay? For those of you who are not familiar with this pattern, it kind of goes like this, where, what you have is, price action coming into this area. It gets broader and broader, and then eventually it starts breaking up and out, okay? That's really how descending broadening wedges work. Now, it's not necessary that this one right here, has to break out, but chances are high, right? That's why we apply some form of statistical data to the breakout percentage. And I think that the breakout percentage from this is like 64 or 65%. It's a pretty, decent chance that we could potentially break out from here. And if we do break out, then again, you should see a further pullback in gold, further pullback in US equities. Like if we look at the S&P 500 futures right now, and it's already trailing with these lower highs. And if you kind of look right here, what it's also doing in its own regard is it's creating its own, descending kind of broadening wedge. And the question is, right, with this pullback that we're seeing the last day or two, okay, do the US equities push up higher, or do they kind of just come up to this pivot, as you can see, the weekly pivot, hit this, and then start rolling back over? I don't know, right? We're just gonna have to look at the market today and tomorrow, because Thursday and Friday, the markets are open, the US equities, and so is the DXY, and then Saturday they're closed, Sunday evening they open again. Personally, I personally think that DXY is creating a base here. I don't know if it's aggressively ready to just start shooting back up, but it might tick up maybe, another point or two. So like maybe 94, 95. And just remember that over the past few days, right, we went from beginning of September, we went from 91 and some change, like 91.8 all the way to 93.7. So just about 2 points. Okay, 2 points was enough to kind of drag the stock market from 3,500 points, or 3,600 technically, all the way down to about 3,300. So a 300-point drop, almost a dump of, how much was the low? Almost 8% low. Bitcoin, same thing, right? From its key high right here, we're currently right now at 18%, all the way down. We were at 21% down. So you can see there is a significant impact of how, currencies like the US dollar or the DXY basket, the way they move. And in this particular instance, I would not be surprised if the DXY starts pushing out, all markets get dragged down. Now, at present moment, like I stated earlier, it looks like we're creating a base, but this is, I think, in my opinion, a base of uncertainty. Because like I said, we have a couple different things working against us, which is the dollar gaining strength. Maybe it's pulling back, retracing a little bit, and maybe it's going to push up higher. Who knows? Same thing with the stock market. Bitcoin also sort of derives its strength from how the US equities are moving. You can see last couple days, the stock market broke down aggressively. It's kind of trying to find a bottom right here. I would say if it holds this marker right here around 3350, it's possible that we can push up higher. If it breaks that, I expect maybe this S1 to break and us heading down further, which is 3,200 points or so. Okay, so that's a pretty significant drop. And if that's the case, right, Bitcoin will probably come to these levels right here of support, which is June monthly open 94.50, the 200 moving average on the daily, which is around $9,100, and then the VWAP, which is around 88.80. That's a yearly VWAP. Okay, so there's a bit more of uncertainty left in the market, and I don't really know, to be honest, what the market is going to do. All I'm doing is doing the best to prepare. That's all you can really do. Like I said, right? Rule number one, protect your capital. Rule number two, grow it. Just because you have those rules doesn't mean you can predict the future and figure out what the market is going to do. All right. You may get lucky here and there, but more often than not, that's really not what the market is about. And that's really not how you trade or invest anyway. Okay. Trading and investing is about knowing that there's going to be very frequent occasions that you will be wrong. And when you're wrong, the question is, how wrong are you? How much capital did you lose? Did you hedge your positions, et cetera, et cetera? So, in this particular instance, I have a lot of altcoin positions that I'm still long in. Some of them are in profit, some of them are not. The place that I would like to see Bitcoin kind of reach up towards and maybe get rejected is if Bitcoin comes up to this 11,000 area and it starts rolling back over. I would probably start cutting my altcoin long exposure up here. I actually have a hedge with the Bitcoin short at present moment. Okay, and the reason I have a hedge is because just in case this thing starts breaking down from here, okay, my altcoins will obviously go down, but at least I'm shorting Bitcoin and I'll make some money out of it on the way down. See, that's how you get good hedges to protect your positions, to protect your capital. If you're simply long biased, okay, in market drawdowns like this where things are uncertain, you will probably get surprised more. You'd be really surprised at how much pain the market can inflict until you really just capitulate and give up your position, okay? Because everybody has a pain tolerance, right? Everybody has a pain tolerance, and at a certain point, you just can't handle the pain, whether it's negative 20% drawdown, negative 40, negative 70, the market will be able to do that. Okay, so just make sure that you're not caught in that bind. Okay, so you guys know my hedge, right? Watch for that movement. And I've talked about this before in my previous videos is you could keep this strategy simple, right? You could keep it simple in two ways, on a daily and a weekly chart. On the weekly chart, we have this very simple moving average, which is the 20 moving average on the weekly, okay? If you look historically on the 20-week moving average on the way up, Bitcoin has never really breached below the 20-week moving average in bull markets like this. You can see just straight up parabolic, touches the moving average, right there, right there, right there, right there, all the way up. Once it starts breaking below the 20-week moving average, we have an extended, drawdown in the market, right? I mean, you can see right there, rejects the 20-week moving average. This one breaks it. And we have, a breakdown for almost 8 or 9 months. Again, over here, once you get above the 20-week moving average, you test that support, can't break above higher, break through, right? Test it as resistance, break through further down. Again, over here, we break up above it, break down even further. Over here, we test the 20-week moving average as support, we push up even higher. So where we are right now, okay, is again the 20-week moving average. We need to hold this level. So this is why you do not technically want to go much further down here. If things are supposed to stay bullish, for this current run that we're having right now, well, we need to start bouncing up from here fast, okay? Because breaking below this area, at the very least, is going to take us to these levels. Oops, $94.50, $9,100, $8,800, possibly even down here to $8,200, okay? So that's why you don't want to break below this 20-week moving average, okay? Because we could, end up in a potential, starting of a bear market or starting of a further drawdown. Now, the other way I spoke about this is, on the daily chart, right? It's very simple in my opinion. On the daily chart, you kind of look at it like this, okay? There's different pockets at which, the 128 moving average, which is the purple line right here, okay? And the 50 moving average, which is a red line. You can see what I just told you about the 20-week moving average earlier. It's kind of the same logic where 128 gets hit right there, right? We find support on it, and then we get rejected at the 50 moving average right here in 2019. And then we, break down further for several weeks. And it's almost a good $2,000 drop, or 20-25% drop. Over here again, we have a short squeeze, reject the 128 moving average, roll over again, reject the 50 moving average, roll over again. Same thing right here, okay? Again, this was the beginning of the year, February, right? Find support right here, 128 moving average, get rejected on the 50, and then boom, big sell-off. So the sell-off is very hard to understand. We don't really know, how big of a sell-off you'll have. But the point is, it's a pretty good, methodology of understanding these, 128 and 50 moving averages are pretty good in terms of using them in continuation markets, right? Continuation trends. If you start breaking below the 128, or you start rejecting the 50, it's at the very least, you should start being careful. It doesn't necessarily mean like, all right, sell everything, get out. It just means, all right, well, something's wrong with the market. We're not able to get above key moving averages. It's things like that, right? Everything in the market is really about probabilities and possibilities. If you can understand that the probabilities may be stacking up for the market to roll over, that's all you need. You don't need a definite sign like, okay, let me get 100% of the clues lined up that market is going up or down. You're never going to get that. There's always going to be something or another that's going to tell you, all right, well, this one says we're going to go up, this one says we're going to go down, this support is holding, but then we have this resistance. It's really not like that. At some point, you have to kind of look at all the clues, add them up together, and obviously look at your own bias, look at your own capital and risk management, and then make the decision to pull the trigger on buying or selling, longing or shorting. Okay, so I think where we are right now is some positive signs. Okay, so let me show you the positive signs, which is we're above the weekly open, right? If you guys have been watching my videos for a while, again, if you're not familiar with our community, guys, our Discord community right here is very active. You can go to the alphatrades.com website, hit the products page right here, okay? Sign up for our Advantage membership, okay? We also have a Shepherd indicator, which we're rolling out, which is really solid because right now on the 12-hour time frame, it's actually showing you that this could be a temporary bottom, okay? This is one of our indicators that we've developed with a very awesome member of ours, a really smart guy. So we're going to start rolling those out real soon. But the point is you can go to our website, sign up for the Advantage membership, and you can have the kind of analysis that you're seeing right now on a daily basis. We update literally every few hours of the day. I put out these updates pretty much, whenever I see something happening in the market, as you can see, they're quite frequent, and you get to see, everything that's happening in the market. No surprises, any big movements, small movements that I feel that are, valuable to comment upon, I talk about it, okay? So anyway, going back to the analysis, we're holding above the September weekly open, and you guys know me, I like prices to stay above weekly open and monthly opens. Unfortunately, price for the September monthly open is way the hell up here around 11.6. Currently, the weekly open for September 6th is around 10,250. If we stay above this area, I still think that we can make it. First target is up here around 10.6. And then second target, I'd probably say just above, this key high right here, which is around 10.9, $11,000. Okay, and if we get to 11,000, then like I said, we get towards, our 50 moving average area, right? It doesn't have to be exact, but it could be around that area. And then we need to see, well, do we come up here and do we start rolling over? Because if that's the case, then I'm gonna start closing on my altcoin positions while they are high, right? Because remember, as BTC goes up here, I'm sure altcoins are gonna gain some value. And then I probably want to add on to my short, because if this is the area that we're getting rejected, well, we're probably going to go down a bit further, maybe for, I don't know, a couple more days, a couple more weeks. At least that's what, again, the probabilities will tell me is this is a good area to start shorting if 50 moving average, starts rejecting price. Okay. Let's see here. The way I'm looking at the stock market right now is, after this kind of big sell-off, I made a video a couple of days ago talking about how there's still a whole lot of, call option volume that needs to be weeded out of the market, because that's really where a whole lot of, the open interest, the sort of gambling, if you will, has been taking place. And if you start pushing the market down, remember, call options, they have a couple things associated with them, right? Theta, which is the time decay, and two, volatility, right? Which is technically the vega. And so if you start grinding the market down and then, on impulsive moves, you start having big drops like this, well, you crush the options value, meaning you're going to crush the actual intrinsic value of the option in terms of its price. And if that's the case, right, if the market keeps bleeding down, well, then those options are going to get crushed. Same thing with Bitcoin, by the way. There's a whole lot of call options of Bitcoin still talking about, end of September, 12,000, or end of September contracts are 13,000, beginning of October, 13,000 targets. The way you make those contracts worthless, guys, is you keep trading in this area, okay, which would then, first of all, decay the option value, which is the theta, like I said. And then on top of that, you drop the market further down, okay, which would obviously decrease the value of the option itself. And then on big volatile drops, it decreases the value of the options even further. Okay. So I think that's kind of what's happening right now in the market is maybe the market is trying to weed out, these participants who are just perpetually kind of gambling with options. At least that's the way I'm looking at it. And this, that's the way other smart people are looking at it. Okay. But additionally, right, there's a couple of great opportunities that I've found. So, I was actually looking at sushi, right? So I'm sure you guys have heard of the controversy of Chef Nomi, the developer who sold a bunch of his sushi coins or whatever for $13 million. And then after that, I think they've decided to basically relegate the stake to FTX. And I'm actually a big fan of FTX because, Sam Bankman-Fried, let's see, Alex Saunders, right? So this guy right here. So Sam Bankman-Fried, okay, the guy who runs FTX, he, I think, is going to take over the Sushi project, which is, great in my opinion, because what that effectively does is, it puts the project, the Sushi project, in the hands of someone who wants to see it succeed, right? And also he has a good financial backing, good understanding of the crypto market, and probably a lot more connections. The interesting thing about Sushi Project, and again, we wrote a Medium article on this. I'll post the link below in the YouTube description. It's a fantastic article, again, written by our writer, Bradley. Make sure you all check it out. It's called SushiSwap and Unsafe Retail. But even though it's an unsafe retail, I think the market the project itself is turning it around, and the market is actually valuing it a little bit higher. And I'll tell you why, okay? Over the past 48 hours, 70% of Uniswap protocol's $2 billion liquidity has migrated to SushiSwap. You can see right here, this is the SushiSwap liquidity right here, okay? And here is, the Uniswap liquidity. This is very interesting because this tells me that people are clearly looking at this market as, maybe a shift in leadership coming, meaning shift in leadership from Uniswap to SushiSwap. So I picked up a position in Sushi. I think it's funny we get to say things like that. We picked up a position in Sushi because it's something that you eat. But, point is, I think sushi right now is very undervalued. You know, it's down, I think like 75, 76% from its high. Okay, where is it down? Yeah, it's about 77% or so. It was down all the way to about 91% to its previous low a couple of days ago. So I personally think this is a good area. Okay, and you know, disclaimer, I am in this position now. My average is like 270, 275. So I'm not too far away from where price is. But the point is, you know, we wrote a article on it right here. Okay, I've been following all the movement that's happening on SushiSwap versus Uniswap, and I do think that there's a leadership switch happening. And so it would probably be good for you to consider looking at this project, doing your own research, and figuring out, you know, what exactly is happening on the back end of you know, Sushi versus Uniswap. Okay, so the link will be below. You know, I personally think that Sushi has, at the very least, you know, it can make it from here towards this, you know, big drop-off point that we had. So that's a 60% move. And if it makes it up to its previous all-time high, right, that's a 279% move. And of course, if it breaks past that, I mean, you know, the options and the ceiling is unlimited, really. If we look at simply a Fibonacci extension, right, we can look at 1.618, which is the $19 marker. The 2.0 extension is $23. So from here, right, where we are right now, the 1.618, that's a good 500-600%. Up here, 750%. So obviously all this is dependent on how Bitcoin moves, right? But I don't mind taking a stab at something like Sushi Perp, because I know that there's now good management behind it. The numbers are now backing it, where we see movement of liquidity moving out of Uniswap into Sushi. So it's not like it's just hopes and dreams. There's like real money moving towards Sushi. So, you know, just things to consider. All right. So I think that's pretty much it, guys. You know, I've talked about everything that I need to talk about. I think ETH is kind of showing you the same signs, which is, you know, it's starting to kind of make its move above this key resistance area that we've been held under. And as you can see, you know, Bitcoin is not broken above this resistance or even this trend line. So I think Bitcoin is not too far behind, you know, behind ETH. And if Bitcoin breaks out, well, then I expect the breakout to head towards 10,500, 10,600, all the way to about 11,000, like I stated earlier. Okay. And then finally, Link is, you know, my big position that I've kept up with. Link has gotten above this key SR level, which is around 1260, 1265. If it could stay above this area, we should be heading towards, you know, this SR level, which is around $14 or so. And so that's, you know, good, was it like 15% move or something? Oh no, it's an 8% move. So yeah, you know, there's a lot of positives that are being seen in the altcoin space right now. So it's possible that maybe we're going back into risk on mode. And I think that's totally fine. You know, I've kept a majority of my altcoin positions and I'm happy I did. But like I said, if you want to protect your capital, you got to have hedges, you know, like I do with shorting Bitcoin right now. And if that doesn't work out, that's okay. You know, I still have my altcoin positions. Okay. So I think that's pretty much it, guys. We're still holding this 4-hour RSI trend line, so that's good. However, we're still beneath this key, you know, SR level of OBV. So once we climb above this in OBV terms, that is, you know, good indication, a good signal that, okay, looks like there's money flows actually coming into the market. We're probably going to push higher, you know, and you guys know my targets to the upside, right? 11,000, 10,600, those, okay? All right, y'all, check us out. Check out the article, you know, How to Trade for a Living, written by Bradley, but obviously this is, you know, these are my rules. The link is going to be below. And then of course there's a YouTube video on it, 10 Commandments, How to Trade for a Living. And then this SushiSwap and Unsafe Retail article. There's just a lot of great content that we put out. And I think a lot of it gets overlooked because, we are not the kind of community that does a whole lot of shilling, does a whole lot of, screaming of buy this project, buy that project. We write really good content, make really great content and videos and articles. And sometimes our work gets overlooked because it's, I think it's very meat heavy, very insightful, very, very kind of bold and honest. And anyway, I hope you guys like it. Okay, that's it. Cheers.